So welcome to part 4 of our market insight. Symax Fintech, we do this for free. We do it as a courtesy. We do it to help you guys. All of this is just to try and give you some help, to help prepare you for the week ahead. So hopefully you appreciate that, and of course hopefully you enjoy it and it works to your advantage. Just a reminder, so we've got a lot of inflation data leading up to the FOMC meeting decision this coming week. Expect some big moves, I would say. And of course, it's going to be a question of whether they're going to skip or they're going to do 25 basis points for the Fed. And of course, CPI could swing it one way or the other. And then, of course, you've got ECB, which is pretty much a done deal for a 25 basis point increase. Now, the indices analysis, just going to warn you here, I've moved on now to the September futures contract as June expires this Friday as part of the quad witching. So just a reminder of the legend. So black numbers in the right hand column, they are going to be support and resistance levels based on trend lines. Brown numbers are breakout levels. Claret numbers, these horizontal lines that I put in, are either levels where I see support or resistance, or whether they're on double, triple tops or bottoms. Just a reminder of the pivot point colors and also the fib colors, and there is at least one chart with the fibs this week. So as usual, starting off with the Dow Jones, you're going to find fibs on a lot of these charts because they will come into play. Once the market's finished the move, as the market starts to turn, that's when to put your fibs on. So they're in there, and you can see those from those lines coming across. If we look at sort of the resistances to start with, we've got 34,072. Below that, 33,816. And of course, we've seen the stocks coming under more and more pressure. It was a little bit mixed on sort of the text because of earnings, but overall quite negative at the moment. And just be aware of that. I've been saying for a few weeks, if not a couple of months now, that for me it's more beneficial to move some of my portfolio from stocks into fixed income, and of course that's worked out quite well so far when you see these moves down. Now below that, then if you look at the moment, which is probably after Friday's close, we're looking at 33106, which is the first fib level to be a resistance level at the moment. Now the market's below it, and then I've got that sort of support stroke resistance at 32,613. So again, it's all going to be where it opens Sunday night stroke Monday morning, and then the second fib level, that 50, is at 32,260, and then the golden ratio is the 618, which is at 31,413, which is an interesting level because obviously I couldn't put these lines on until we made that high, which was in sort of July, August time. But when you look back to March, see how perfect it's actually bounced off of that 618 level, even though you couldn't physically have put that on at the time. So it's amazing how sort of, again, sort of math or whatever comes into play here, that when you look back historically, that some of these that we're putting on now, these levels, actually still relate to what's happened in the past. And that's why technical analysis is so useful. And then below that, I've got support at 30,103. Okay, so when we look at the 30-minute, obviously we had that big sell-off on Friday afternoon. I think there was a big sense that Israel were going to sort of beef up their approach to going into Gaza. So that was reflected with what was going on with commodities as well as what was going on with stocks. So I have resistance on the 30-minute at 33.019 and support at 32.398. Moving on to the S&P, I've got resistance at 44.15. Also on, the fibs again. So the first one, because the market's closed below, is effectively a resistance for the moment, which is 42.03. Below that, I've got a support level that I found at 41.12. Below that, the second fib comes into play at 4,069. And again, when you look to the left, even though, we couldn't have put them on at the time, you found another couple of support levels to the left. So they're good levels to keep an eye on. Whether they're going to hold or not is going to depend on how people react to Israel going into Gaza. And then, of course, we've got the 50 level, which is 4,069. And then we come down to the golden ratio, the 618, which is down there at 39.35. Then below that, I've managed to find another support at 38.06. So again, with the dailies, they're probably worth either taking a screenshot or taking a picture on your camera, on your phone, and just keeping these as reminders of these levels, because there's potential for these to come into play this week. And hopefully it was going to help you with your trading. And then we move on to the 30-minute with the S&P. I've got resistance at 41.90, also at 41.72, with support at 41.21. Now, I'm recording all of this on a Sunday evening in the UK. By the time the markets open, we could see some gaps in these markets. Nasdaq. So here I've got resistance at 15.053. I've got support sort of just about at 14.242. Then the fibs come into play. So as you notice, the fibs are still below the market price. So the fibs there, 14.041, 13.413, and that golden ratio again at 12.785. So I might be wrong, but I'm just expecting a volatile opening, a reaction to what's going on with Israel. Okay, so moving on to the 30-minute chart, I've got resistance at 14.362, also at 14.285, and support at 14.206. Now I've sort of scrunched up the Russell here to sort of take a bigger look at this, going back further, all the way back to when COVID hit in 2020, in fact, is where I've taken the low of this from. And of course, the Russell, because it's the small cap, they're much more sensitive with what's going on with consumers. They're sensitive to interest rates because generally they don't have that large amount of cash in the bank, so they're borrowing. And again, if they're having to pay higher costs through inflation, and if they're having to pay higher salaries because of inflation, it's a matter of how much they can pass on to the consumer. And so I've put those in, and from here, where the Nasdaq was still above all of the fibs, here you can see that it's actually already below 2 of the fibs, and that's where it becomes that bit more sensitive to what's going on in the real economy. So I've got resistance at 2006, and then resistance at 1888. Again, so that's the first fib level at 382, and then 1710, which is the second fib level, 50s, and then I've got this sort of support line in there at 1642. Again, it's there. For me, it's a breakout level also. So if it sort of, I've got it as a trend line support, but also it's there as a breakout level for me. So if it gets through there, it's more likely, remember, just my view, that it's going to go down to test the golden ratio level at 1532. Just remember, this is always just my analysis. I'm talking out loud. These are not recommendations. And then of course we come down to that fib level, as I say, at 1532, that golden ratio. I quite like the golden ratios because obviously, you know, it's the key one that everybody looks at as an analyst. But it's also the fact that if they get broken, there's so much potential on the downside, because it, you know, it makes the difference between whether the market is just retracing, i.e., you know, it's just having a break before it continues its original trajectory, or it becomes a reversal where that move is over and you're seeing that complete correction. So on the Russell 2000, I've got on the 30-minute, I've got resistance at 1673 and support at 1637. Moving on to currencies, cable, so the pound against the dollar. Again, you know, are we going to see sort of a bit more of a haven trade, a bit more flight to quality? So there's potential that the dollar could strengthen more on that basis, plus the fact they've got the strongest economy. So yeah, economically, I think politically, I don't think they're great at all. I think that they need to really work on that, because that does impact sort of economics and people's livelihoods as well. You know, when they keep battling each other across the, you know, in the Senate and such like, because, you know, when you're looking at all of this, it's just crazy that they, you know, the #1 economy has these political issues all the time. You know, for me, they should just come up with some form of a formula that they can put into place and then argue about any slight tweaks to that. But at least then that takes away all these risks of you know, shutdowns and arguing over budgets and debt ceilings all the time. Anyway, that's getting off point, but you know, that's just my personal view, because it's a shame. Okay, so as you can see, the dollar's been strengthening this week, though it's a little bit of sideways action, and so I've got resistance at 123.40. I've also got some support round about 120.36, but it's a breakout level, so if it goes on the downside, I'm expecting it to go lower. And then we come into that 50 level, which is at 117.70, and then below that the golden ratio, which is at 114.45. So big gaps between them, but you know, we could see some big moves this week. You know, maybe I'm overreacting, maybe I'm expecting too much, but we're soon going to find out. Okay, on the 30-minute, I've got resistance at 121.61. I've also got resistance at 121.26. Support at 121.09 and 120.77. Moving on to the euro against the dollar. Here I've got resistance at 107.07. Support at 105.36, and then the fibs are there, so got one on the resistance there at 106.56. Support wise, there's the 50, which is at 104.53. The golden ratio's down there at 102.50. So again, you know, there's just with what's going on, you know, we haven't just got sort of the Israel situation with Gaza, which is going to be a massive impact, I think, on the markets. But, you know, we've also got all the employment data coming out in the States this week, plus FOMC. So there's a lot going on. Moving on to the 30-minute, I've got resistance at 106.19 and support at 105.47. Bitcoin had a big week, big rally. Just rumours of ETFs, and again, to a degree, you know, is it now a digital gold? You know, if people are getting more nervous about what's going on economically, politically, you know, would they rather be in a digital currency? So we saw Bitcoin have a rally. I got resistance at the moment on the daily at 35,395 and support 27,030. So yeah, that is a big gap on the daily. But again, you know, if it starts to come off, maybe there's going to be some breakouts. But I think it's going to react to probably what's going on economically and geopolitically. When we look at the 30-minute, I've got resistance at 34,471. I've got support at 33,650, but that's a breakout level if it gets below that. And I've got another support which becomes a breakout level at 32,875. Again, you know, in case you're interested, this just sort of demonstrates what's going on in stocks, the Nasdaq especially, against crypto, so Bitcoin. And again, you know, you've seen them cross where they sort of was almost mirroring each other with an inverse relationship. We've still got that inverse relationship, but now we've got Bitcoin rallying and we've got the stocks having more and more of a sell-off. Moving on to gold, you know, had that big spike up. So again, you know, when it reopens, we could see a gap here. But at the moment, I've got resistance at 2020. I've got support at 1956. On the 30-minute, I've got resistance at 2020 still. I've got support at 2006, but that's a breakout level if it should get below that. And then I've got support at 1988. So as you can see, you know, when we do the 30 minutes, we leave the pivot points on there. You know, they're still holding in at times. Just be aware of the potential increase of volatility this week. Okay, so finally we're going to look at oil. It did sort of have a move up. It was looking a little bit under pressure midweek, but it's sort of, you know, the expectations of what was going on in the Middle East has certainly gave that a pop towards the end of the week and had a good rally on Friday afternoon. So I've got resistance at 91.32. Sort of, I suppose, a effective pivot point there, because this pivot on the, sorry, this is not a pivot, this is the Fibonacci that I've got on here. And this is sort of 84.35. So again, it's going to depend where that opens, but that's more likely to become a support level. And then below that, we've got the 50s, which is $81. And then below that, the golden ratio, which is 77.75. And of course, the recent high, which is 95.05, is marked on there as well. So anyway, coming back to these pivot point levels, just got a bit ahead of myself there. As you can see, you know, that's still there. They do hold in. Obviously, you've got to expect them to go through that little bit more just because of the volatility. Therefore, it's important to sort of widen those stops. But if you're going to widen the stop, you've got to cut your size down to compensate. You know, don't accept bigger losses. Just compensate size of the trade. Less size, wider stops equals the same thing. I'm not encouraging you to potentially risk more money there. You know, it's how I trade. So, okay, so if we look at resistance, we've got 86.26 and support at 83.84, 83.02 and 82.44. I suppose really I should have made that 86.26 on the upside as a breakout level if it gets above that. because that, you know, again, it's really going to depend on how traders see this situation going in the Middle East. So that's it. You know, hope you have a great week. You know, there's lots coming out geopolitically, economically. So, you know, just be selective with your trades. You know, there's always going to be another trade. So just make sure if you're going to go in, you're looking and you're only going to set those high probability trades. Again, just finally, a little reminder of what we do. So apart from the YouTubes, daily newsletters that go straight to your inbox each morning to provide you with global headlines, global news, and also my views. And then if you'd like to subscribe, we also provide chart levels and pivot points. When it comes to courses, we offer everything from one-day workshops, one-week courses. One of those includes a free trading challenge, up to the comprehensive masterclass, which is an accredited course, and the next one of that starts in a week's time on the 19th of June. So if you're interested, then contact us quickly because those places won't be around for long. Now, also trader mentoring, where we help traders improve and get to that next level time and again. We consult to companies, FX and commodity exposure. We provide a whole platform and mass of educational content to individuals, exchanges and brokers. And